There's the closing bell on Wall Street. Now it is market domination overtime. Jared Blikre will be along in a moment to get us up to speed on the details behind today's trade. I'm going to start with the major averages here. A plus day for the markets here. The Dow finishing higher by about 485 points, about 1.2% here. And this is after the U.S. government confirmed a 1-month reprieve, at least, on those 25% tariffs from Mexico and Canada on autos specifically. So that was enough to send stocks higher today. And unlike yesterday, we did not see that sort of late day fade that we have seen sometimes as of late. The S&P 500 finishing higher by 1.1%. The NASDAQ up 1.5%. We saw industrials and materials gaining today. We saw large cap tech doing pretty well as well. Energy, one of the groups that was lagging, however. Jared's got more details on all of that stuff. Hey, Jared.
Thank you. Some decent gains today. You might be asking yourself, well, we haven't seen this in a while, or saying that we haven't seen gains this big since Friday. So we've seen some recent volatility. I think that's a good way to put it, both to the downside and to the upside. And today we're moving to the upside. So in the big picture, yes, the S&P 500 still maintaining its 200-day moving average. Big target there that has remained intact. And let's take a look at the 10-year T-note yield. That has been heading down in previous days, but today it's up 6 basis points. That's a fairly big move. Here's the year to date to give you a little bit of an idea of how much it's dropped and how little this bounces. In the context of that, here's the U.S. dollar index, which is down 3 days now. 4.68% is actually a pretty big month year to date for a currency. That's a big amount for a currency. Looking at the sector action, materials was by far and away the biggest recipient of that dollar weakness, and that's 2.65%. That is the gains of materials today. After that, industrials up about 1.5%. Consumer discretionary and tech and communication services, those mega cap sectors just following those top two. And so that rounds out the top line. What didn't work today, energy and utilities. Those finished in the red. And let's take a look at the NASDAQ 100, where we see a lot of green, not in the upper left. Apple still the biggest stock in the solar system. That is down 8 basis points today. Microsoft up 3%. Amazon up 2%, Meta up 2.5%. So some nice gains by some of these Mag 7 stalwarts. I should also say Broadcom and Tesla each up more than 2%. Checking on the Dow real quick, pretty similar story, more green than red. And some of the red names are some of the more defensive names and energy that you might see. I'm going to toss it back to you, Josh.
Thank you, Jared. Wall Street breathing a sigh of relief after the Trump administration gave the automakers a 1-month reprieve on tariffs. Major averages climbing after back-to-back sharp losses earlier in the week. Our next guest says there are opportunities in this sell-off. And joining us now is Anthony Forcione, Rockland Trust Portfolio Manager. Anthony, great to see you. So reading through your notes, Anthony, it does seem like you're suggesting, listen, this recent sell-off, it might have created the conditions for compelling investment opportunities. Am I reading that right?
Yeah, I mean, as long-term investors, we always look for opportunities where, the baby's thrown out with the bathwater. And when you think about this big picture, markets are not down that much. From year end, it's basically flat from the S&P 500. And as we kind of went into this year, it's impossible to think that we weren't going to get a lot more volatility. For quite a while, we had very low or no volatility. And we know with the Trump administration, things can change pretty quickly and things have gone fast and furious. So we know there's going to be a lot of volatility. And with volatility, opportunities arise. So we always continue to look for opportunities for great companies at lower prices.
And how do you figure out, Anthony, that they're, not going to be continually or sustainably buffeted by some of these bigger market forces? I mean, if you're looking as a long-term investor, what kind of horizon do you need to look to be able to look through what's happening right now?
Yeah, it's a great question because we get that question a lot from clients about sort of what are we thinking about the current environment. I think one thing we've all learned and been trained is that things can change very quickly. Just look in the last 48 hours between tariff implementation and already sort of a walking back. And investors have been talking about this for a while of the between the threat and reality of tariffs. So when you take a bigger picture, it's hard to sort of price the moment, so to speak. And we're looking for those companies that are obviously well positioned in their industries that they compete in, and from the understanding that we have, can sustain that competitive position from a long-term basis. And When those kind of companies sort of go on sale, we're generally buyers.
Anthony, I want to get your take on the Fed quickly. Our colleague Josh Schaefer has a story out. Headline: Investors aren't cheering for Fed rate cuts anymore. Meaning, if Jay Powell and the gang are going to be cutting, Anthony, because they're worried about an economic slowdown, that's obviously not such good news. But how is an investor, a market pro like yourself, how are you thinking through that dynamic?
Yeah, great question. The Fed debate and interest rates is honestly the most debated topic on Wall Street, in my opinion. And in a way, they're talking out of both ends, because Chairman Powell upfront says that they're still very restrictive, but at the same time, not in a hurry to lower rates. But you're right. When you look at what's happened lately in the bond market, the 10-year has gone from 480 to 417 at its low, up a little bit today. But as I've mentioned, you want to be careful what you're rooting for. Generally, when rates are going down, that means there's something wrong with the economy, and the market has been sort of sniffing this out the last couple of weeks, that maybe there's a problem with the economy, and even talking about the R word, recession again, because we have gotten some weaker data points, certainly around the consumer, certainly around manufacturing, and now more concern around the jobs market, ignited by DOGE and what they're doing. So you're right. I think rates are going to be coming down generally over time, but if the Fed has to act quicker than anyone anticipated, that might not be a great thing, because the economy is slowing faster. And I think that's one of the more interesting developments in the last month or so, given this volatility in this data, is that I think the odds are higher that the Fed does cut before June. So I think their meeting, obviously, in a couple of weeks will be very, very interesting, and certainly their commentary will be really telling.
And let's get to some specific stocks that you think are worth scooping up during this period of volatility. One of them is Alphabet. The stock's down more than 8% just this year. And we've seen a lot of the Mag 7 kind of struggle this year. Part of the concern with Alphabet seems to be the spending it's doing on AI and questions about what it's getting back from that. Why do you think it's good to get in here?
Yeah, Alphabet is kind of an enigma in the sense that it's obviously a very, very great company, dominant company with strong franchises in search, YouTube, cloud business. But the stock trades at a discount to the market. When you look at the forward estimates and looking out over the next 12 months, it trades at sort of 15, 16 times earnings. That seems ridiculous and too inexpensive. There's no question there's some concerns around the long-term view of the search business vis-a-vis ChatGPT and what's happening there. But I think the company is doing a lot of really strong positioning in that space of position, the search business going forward. So I think the stock is just way too cheap here. It like you said, it has underperformed since they reported earnings on, frankly, probably a little bit of a softer outlook than people had hoped for. And like you said, sort of the CapEx spending. But I think the risk reward here is very strong for a company like Alphabet at these prices.
Way too cheap. All right, Anthony, thank you so much. Actionable stuff for folks who are watching.
Thank you.
Worries of a full-blown trade war and more supply entering the market, sending oil futures tumbling to a 6-month low and dragging energy stocks with it. Joining us now, Yahoo Finance's Ines Ferre with more on the oil action, which has been mostly downward. Ines.
Yeah, that's right, Julie. Oil really has been slammed following this week's decision from OPEC to increase supply. Also, more talk about trying to end the war in Ukraine and concerns over a full-blown trade war impacting demand. So today, we saw oil dropping almost a 3% drop off of the lows here, you can see, but nevertheless, Brent also down more than 2%. I do want to show you, over the last 5 days, we have seen crude coming down about 5% for both Brent and WTI. This drop is not good for shale producers. One oil veteran telling me they're not going to be incentivized to produce more if prices plummet. He said if WTI goes below 70 a barrel, it's at 60 66 right now. Also deregulating, that may incentivize more incremental production, but they're really, now these companies are focused on free cash flow, so they'll gradually produce less if the drop goes all the way down, especially to the low 60s. I do want to mention that we are at the lows of the year, certainly, and we are at a 6-month low, and the next drop would be to a multi-year low because we're approaching 2022 lows as well. I want to mention what's been happening to energy-related equities because those have been slammed. XLE today down more than 1.5%. But remember that XLE was a leader back in February. In fact, it was up more than 7%. It was an outperformer among the S&P 500 sectors. If we just take a look at a year-to-date chart now, it's one of the underperformers, up just 0.1%. Guys?
Yes, indeed. Thank you so much, Inez. Appreciate it. Well, shares of Rigetti Computing are in focus as the quantum computing company is reporting its latest earnings. And really, we've had this bigger quantum computing craze as of late. We're going to get you the numbers and, more importantly, check in on the state of the quantum sector on the other side. Stick around. Much more market domination overtime coming up.
Big tech is lining up to get into President Trump's good graces. You know who's been watching that closely? Of course you do. It's Yahoo Finance's very own tech editor, Dan Howley. Dan.
This guy right here. Yeah, I mean, it's interesting to see what the tech companies are doing to just try to butter up Trump, ensure that they stay in his good graces, and just try to avoid anything that could cause them any kind of agita during this second Trump administration. So far, some of the things we've seen is obviously Apple announcing its $500 billion investment in the U.S., but a lot of analysts have pointed out that that was planned, or it was something that was going to what was already in the works, not necessarily a huge change for them. Google basically going ahead and changing Gulf of Mexico to Gulf of America. A bunch of these companies doing away with their DEI program, saying, look, we have to. Apple, not one of them. Apple saying, no, we're going to keep it. And their shareholders said, we want you to keep it. But we also have Meta, Mark Zuckerberg, essentially changing his personality to more or less appease Trump. One of the experts that I spoke to had said he went down to Mar-a-Lago, said that Meta was weak, and he came back and had to appoint Dana White to his board, who's a Trump ally. So it's all of these different machinations that you see these companies doing, and some of the ones that you don't necessarily hear about. Microsoft, Satya Nadella had gone and met with Trump, but it wasn't, there was no such fanfare that we've seen from, Apple or Meta or Google for that matter. And Jensen Huang from NVIDIA had done the same thing, but there was no such fanfare. And so, you have some companies taking a more subdued approach to this, and others taking this very outward approach. And obviously the Jeff Bezos, not the CEO of Amazon, but the founder of Amazon, but also heads up Blue Origin. He had that acrimonious relationship with Trump in the first administration, his first term, trying to smooth things over there because, well, he wants Blue Origin to get some contracts most likely, and he doesn't want Amazon to take any hits. And so he's gone ahead and made changes to the editorial board at the Washington Post, which he owns. Part of that probably has to do with the fact that Trump had so many issues with the reporting from the Post in his first administration. And so there's all of these kinds of workings that the tech companies are trying to come to ensure that they can essentially, like I said, stay in Trump's good graces, butter him up, as I said in my newsletter. And there's nothing more seemingly that he likes than that.
And it's interesting because it's not like it's a one-to-one correlation, like the CEOs put this in and then they get this out.
No.
Because last night in the speech, Trump also talked about how he wants to eliminate the CHIPS Act funding. He's been striking his own deals with some of these companies to invest in the U.S., but not as part of the CHIPS Act.
No, and it's interesting. He had this $100 billion announcement with TSMC. I believe that was on Monday. The days just blend together.
Yes.
And last night during the speech, he had said $165 billion. That's not all just from his negotiations or his talk with TSMC. The $65 billion is actually a prior investment that they had announced, and part of that funding actually comes from the CHIPS Act. $6.6 billion is from the CHIPS Act. And so, the discussions that he had about the CHIPS Act last night, which was basically saying it was a terrible, terrible thing, and telling House Speaker Mike Johnson to get rid of it and then do whatever he wants essentially with the rest of the money. Well, that would take an act of Congress. It would also take a lot of convincing of some of the Republican senators and representatives, because they're in districts that directly benefit from CHIPS Act funding, because that's where some of these factories are being built. And so this whole idea of doing away with the CHIPS Act doesn't seem to hold any water. It would take a lot to throw that out.
Switching gears, you mentioned Apple. Didn't Tim Cook's company make some news today, I believe?
Yes, they made big announcements this morning, actually. They announced 2 new sets of products. They have the new MacBook Air. That's running their M4 chip. It's basically the long and short of it is it's much faster than the prior generations. New cool color. It's kind of a sky blue, which I would personally opt for. And a better webcam. It's using their center stage technology, which keeps you in frame regardless of whether you move, which I'm not, helping our camera people with right now. They also announced the most powerful Mac that they've ever had. That's the Mac Studio, and that's coming with both an M4 Max chip and an M3 Ultra. Now, I know it sounds weird, but the M3 Ultra is actually the more powerful of the two, and I got to see them put together a scene in a video game development app, and they used a large language model. It was 400-something billion parameter long large language model, saying, okay, write code to put 1,000 assets into this scene that we're working on. They did that in a snap, no problem. Then they switched screens, and they showed that in the background of that they were also running this game Cyberpunk 2077, which takes a huge amount of resources to run well, and it was running perfectly. So this kind of machine that they're talking about is nuts. It starts at $39.99. It can get up to 512 gigabytes of unified memory. Think of that as RAM, but it's part and parcel for the chip. But to be able to have that kind of performance out of a computer like that is nuts. Is it going to be a volume seller? No. Because it's $39.99 starting price, and when you start to move that up,
most people don't need all that stuff you're talking about.
No, I want it, but I don't want to buy it, so it's not going to happen. But the new Airs, by the way, the 13 and 15 inch, they get the newer processor. They also get a price drop of $100. So rather than $10.99 for the 13 inch, it's now $9.99, and rather than $11.99 for the 15 inch, it's $10.99. So that's a nice kind of addition to the fact that you're getting that Air with the new processor and with that better webcam. And look, there's really no better laptop out there than the Air.
All right, Dan, maybe that is something to think about then.
Look, I might get that.
Appreciate it. Well, quantum computing company Rigetti reporting its fourth quarter results, noting it received net proceeds of $153 million during the quarter. The company finding itself in an industry that has grabbed the market's attention as investors look to the next tech buzz amid the AI boom. Here to discuss, Benchmark Company Managing Director David Williams. Now, David, obviously there's been a lot of focus on these quantum companies. To be clear, Rigetti, forget about it even making money. It barely even makes revenue. We know that these are very sort of early stage companies in quantum, right? So how should investors be thinking about this landscape right now?
It's an interesting topic in terms of investors and how you think about these stocks. But unlike the semiconductor companies as a whole, I think these are largely pre-revenue, and we're not basing valuation on what the revenue base is today, but what can it be, and how quickly are they making progress against their milestones. And we continue to see that happen. It's actually accelerating much more quickly than we think that many in the industry had anticipated, and we're quite excited about the progress that they've made.
This is a great topic of interest, obviously, for investors. Can you kind of break down, though, and this might be helpful, David, for a lot of viewers who are listening, how are quantum computers different than, say, supercomputers, David? Maybe quantum computers, the basics for dummies, David.
Yeah, it's a question we get often, and I think what's most important to think about is that nothing other than the core central processing that it's using an atom right at the atomic layer, but everything else beyond that is really the same as a classical system. And so what really the core of quantum is at the processor level, and that it's using an atom or some version of an atom to do processing work versus using electricity or a bit and storing that as a 0 or a 1. A qubit is the alternative in the quantum world, and that can be a 0 or a 1 or anything in between that. And so it allows for much larger parallelization of processing, which just lets you do many more types of problems much more quickly than you can do on classical systems.
I think most of this is above most people's heads, safe to say, David. I guess use case wise, what would we be looking for all of that to do that computing cannot currently do?
Yeah, that's another great question. If you look across the landscape, there are a lot of problems out there that we simply have not been able to answer or to solve. And today, especially with AI, the computing power that's required is growing exponentially. And that's where quantum can come in just one example, is to step into that workflow and offload some of those really compute-intensive applications, that compute, to a quantum computer that can do that very efficiently, very easily, and then pass it back to the GPU or to the rest of the compute system. Otherwise, there's optimization problems. There's a lot of work being done in pharmaceuticals and in chemistry, material modeling. There's a host of problems, and I think it's much, much larger than I think that we even can see today in terms of the types of problems that we can solve.
How big, David, is this market right now when we're talking about commercial quantum computing? How big is it and how fast is it growing?
It's in its relative infancy today, and most of the companies that we're seeing that are investing money are doing it they're in the very early stages. They're exploring how to work quantum into their workflow. What can it do? And much like AI has really come up this curve very, very quickly, and I think it caught a lot of companies off guard, quantum has been moving in that same direction. And so I think the realization of AI and its game-changing benefit to business is making people want to invest in quantum earlier instead of missing that boat. And so today, I would say that the commercial side of it is relatively small, but we expect that to be a $40 to $50 billion market in the next 5 to 10 years, rather than 5 years.
And David, are you recommending that people just sort of get access to this thesis sort of however they can in the public markets? Are all of, is it so early stage that it's unclear who's going to be winners at this point, or do you think it is clear even at this stage?
Yeah, I don't think it's a winner-take-all type of game, that there are different applications and different things that each company is working towards. And much like IonQ is very good at certain applications, I think that Rigetti is very well suited for their set of applications. And the same with D-Wave that's actually out in the market today with real applications and getting real commercial revenue from it. So I don't think it's too early. I think this is definitely a place that you want to be involved in today, understand the landscape and where the milestones are, what we're looking for. And I think it's much more, again, like I said earlier, but much closer to actually achieving real benefit on a commercial level than I think many would anticipate. Especially, even Jensen Huang at CES this year talked about quantum being, for useful quantum being, decades away. And then we've since heard that kind of change course a bit. And in fact, they're having a quantum computing track at NVIDIA's big conference coming up. And so I think that what we're understanding and realizing is that quantum has made so much progress, and that we're so much closer to where the eventual commercialization of it can be.
David, great to have you on the show today. Thanks so much for your time. Appreciate it.
Absolutely. Thanks for the question.
Time now for what to watch Thursday, March 6th. Starting off on the earnings front, some big names from the retail sector are going to be reporting tomorrow, and that includes Kroger, BJ's Wholesale, and Costco. Costco announcing results for its second quarter after the closing bell. Analysts expecting the company to post solid same-store sales growth driven by a strong holiday season.
Taking a look at the Fed, a couple of Fed officials speaking tomorrow throughout the day. We've got Fed Governor Christopher Waller and Atlanta Fed President Raphael Bostic Wall Street will listen for more commentary on inflation and whether rates will remain in restrictive territory. Fed President John Williams became the latest official to talk about it yesterday, saying he anticipates tariffs will contribute to inflation.
And moving over to housing, weekly mortgage rate data from Freddie Mac is coming out in the afternoon. Rates could extend 6 straight weeks of declines tomorrow. The rate for the 30-year fix currently sitting at 6.76%.
That'll do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell.
But don't go anywhere. On the other side of the break, it's Asking for a Trend. I've got you covered for the next half hour with the latest and greatest market moving stories so you can get ahead of the themes affecting your money. Stay tuned.